for coming by and checking out the Mark Chameleon pre-market webinar. Before we get started, let's take a look at the shared disclaimer. Be aware that Market Chameleon, Demetri, and myself are not registered investment advisors or a broker-dealer. If you're searching for investment advice, please reach out to a licensed professional. This show, as all our shows, is for informational purposes only concerning Market Chameleon tools and products. With that, D, good Friday morning, my friend.
Good. How are you?
Good.
Good morning, everyone. Let me share my screen here. And today we'll cover a tool that lets us get insights on intraday stock returns. So these would be returns that are, not within the day, within, between 9:30 and 4 o'clock. And that analysis will apply for certain strategies that are very short-term in nature. If you're looking for something that a strategy that you're not going to hold a position overnight, you don't want to carry the position, or perhaps you're looking at a strategy of re-hedging an existing position. So if you have let's say an options position that has Greeks, and you have deltas, and you have gamma, and you're trying to analyze how to manage that position, this could come in useful. And also just certain events happen that have price impacts intraday that you might want to analyze. Like, for example, if a Fed decision comes out, like say at 2 o'clock, well, what is the stock volatility, or how does the stock tend to behave, let's say right before the announcement, or maybe you want to see the hour before, the hour after, maybe the 5 minutes before, the 5 minutes after. So these are types of scenarios that you might want to look at how a stock behaves intraday. Okay, so we're going to take a look at this tool, and I'm going to use SPY in our example. So if you type in SPY up here, you're going to land on this summary page. If you go to the left-hand side and under tools, you'll see intraday returns. So click on that, and then you come to this intraday tool analyzer. So I'm going to close this menu to expand our screen. And here we have a couple things. We could set the calculator, our inputs. We could calculate it, and then we get these outputs here to analyze, okay, with a table. And the inputs would be a start and end time, because when you're looking at an intraday return, you want to define, well, exactly, which two reference points am I analyzing, so you need like a starting point and an ending point to get a return. So for instance, let's just say we want to analyze how does the stock behave, between the first half hour, let's say 9:30 to 9 to 10 o'clock, right? So we could set that, and then we could analyze how does the first half hour of the stock tend to behave historically, okay? And we could also set it for day of the week. Maybe, we want to take a look at it on a Friday or a Monday or a Tuesday. We could look at most recent weeks up to 16 weeks, the last 2, 3, 4, or we could do it around events. And then we could compare it to another stock. But let's just take a look at between 9:30 and 10 a.m. Okay, to all available data. So we're going to go 9:30 till 10 a.m. in SPY. We're going to calculate that, and then we get this summary statistics. Again, you could, and keep in mind, you could trade an option or stock with a very short period in mind. You might be, you could trade in and out of the same option in a half hour, or in an hour, the last hour of the day, the first hour of the day, or even a certain strategy, a pair strategy. So in this case, we're just going to keep it simple and look at SPY performance between 9:30 and 10 o'clock. And here we have three types of analytics. The first one is looking at absolute returns. And absolute returns are stock movements. It doesn't matter which direction, right? So if the stock moves down 0.5% or up 0.5%, the absolute move is at 0.5%. Okay, so it's just looking at the magnitude of the moves. Especially, it's very important to calculate your risk, options, and so forth. So here we have absolute returns. And we could see that in the first half hour, on average, SPY moves, this is around 0.2%. And to make things just easier on, so you don't have to do it in your head, it takes the average absolute move, multiplies it by the last price to give you the dollar move of 96 cents. Okay, so that's the average move, 0.2% in the first half hour. So you kind of have an idea of, if you're thinking of a strategy and the potential volatility and risk there, this is one reference point. Now, the average can get skewed. You could have some big moves there, some that could skew the average up. So this is the median move of 0.1. So if we use the median move, which is saying that if we took all our data and sorted it highest to lowest and looked right in the middle, half of the observations were above this, half below. That's 67 cents if we convert it from percentage to stock. So that's gives you kind of an idea or sense of the volatility of this stock for that half hour, for the first half hour of trading. We could compare that to the last half hour, the middle, whatever went, but that gives us that idea. Then we could kind of look at the simple returns just to see if there's some kind of a skew in our data. Does it tend to move higher or lower in the first half hour? Maybe the first half hour tends to be, more positive or more negative for whatever reason. Maybe that's when, the buyers might be queued up in the start of the day, or the sellers queued up, or is it just, equal? Like, what does the data say? That's what we want to know. What does the data suggest? So if we looked at the simple returns and average them all out, here it's saying it's really even. The average is a break even. And to get a sense of the best, the range of the best and worst, if there's like a skew, maybe where, the worst is much greater than the best return, or the other way around. So we see that in our data set, the best upside return was 1.5%. And keep in mind, this is from the open. This doesn't count a gap. This would say starting from the opening, 9:30, right? This is the time. So if it gap up in the morning, it's not looking at that. It's looking at specifically, okay, where did it open till 10 a.m. We could see that in the first half hour, even at the open, we had a pretty big move of 1.5%, which would translate to, if it did that today, to $8.88. The worst one to the downside, right, in that half hour of trading was 0.8%, so $4.64. So it gives us a sense of that it could be volatile both directions. As a matter of fact, the volatility to the upside, based on these numbers, these extremes, was almost twice as much as the one to the downside. So we could see volatility both ways, and if we look at those extremes, to the upside, it was even it displayed an even like larger magnitude. So another thing we could do is look at if we separated the simple returns and put them in buckets, the up moves and then the down moves, right? Like and the idea there is that, we could have an imbalance in the frequency of moves to the upside, to the downside. It's potentially, that 60% of the time the stock's higher and 40% of the time it's lower, but the magnitude of the moves could be different, right? Just because it's up, just because 60% of the time it's up, well, if it's up only 0.1%, and when it's down 0.2%, well, then the down move, then on average it's gonna be low, right? The down moves, you got to be careful with that, because if you keep doing it, it doesn't matter if you have more wins, because the losses will exceed, all the other wins. So let's separate the up moves and down moves. And let's take a look at, potential downside, potential upside. And here it says it's pretty equivalent. The average up move, 0.2%, average down move. So that's pretty equivalent. And if we look at the percentages, it's like 50-50. Half the moves were up, half the moves were down. So that first half hour really just shows a pretty, 50-50 in our data set, right? Pretty even. There's no apparent or obvious, skew looking at this, or anything unusual just looking at this. But we could get a sense of the potential volatility, the potential moves in the first half hour. We could change that too and say, well, what about on a Friday? Oh, sorry, where's that? Day of the week. What if we looked at it on Friday? It might look different, because then you're getting more specific. So let's take a look at it on a Friday, since it's Friday, and calculate that. And here, it's very similar. It looks like maybe, the percentages changed a little bit. The up moves looks like they exceeded the down moves a little bit, right? We got like 63% of the time on Fridays in our data set that the initial half hour. So keep in mind, even it's not looking at the pre-market or the opening gap. It's looking at starting 9:30 to 10. So the stock could still be down in a day. It's just looking at that half hour. So here it looks like, the stock for the first half hour tends to do better. The volatility looks like it's a little bit higher, but almost the same. I'd say it's still 0.2%. And maybe you could see the best move and worst move now look different. The worst move exceeds the best move in our data set, but on average, it was still close to break even, a little bit higher. So that's narrowing it down to, time and day of the week. And down here, this particular graph shows us the return for each of those observations in our analysis. So right now we have it set to Friday. So you can see here that these are going back in time on the Fridays. And for that half hour, it's showing us the return. And then the bars pointing up, that's showing us the magnitude of the move, right? So if we see a bar that goes way up, that means that magnitude of the move was bigger than the other ones. Okay. Red indicates that the move was down. Green the move was up. Okay, and this dotted line here is the average of all the moves. So we could kind of see where the bars exceeded the average. So the idea they're looking at that data set is, can we just spot eyeball any particular, patterns or trends that stick out? Like, do large red moves are they followed by, another, does it create a trend, or does it recover here? We're not looking day to day, we're looking Fridays. But is there any like pattern developing or something that may be interesting to look at? Especially like what happens where you get way above the average, or if it's below the average, how long does it tend to stay there for a while? Or above the average, does it stay above the average for a while? So those are the things that kind of this graph visually might help you take a look at the data set, so you could go analyze it further. So if you visually see something like, well, this looks strange, I see it repeating. So what's going on there? So that's another quick visual tool to narrow down the analysis. So let's come back up here. And sometimes we might just like we looked for the first half hour of trading, we could go and say, well, what about the last half hour of trading? Because things are going on in the last half hour that might not be going on in the first half hour or the middle, right? People need to, in the last half hour, you have people that need to re-hedge their positions, rebalance positions. They might be liquidating intraday positions. If you're carrying a strategy that's intraday, compares trade or something, you're either rebalancing, liquidating it, rehedging your options trades. You could, there are lots of things going on. At the end of the day, even the last 2 minutes, we could analyze those. So let's just take a look and see if there's a difference here. We go to, let me see, let's say 3:30, right, till 4 o'clock. And maybe that's what we're interested in. The last half hour is the volatility pickup. Does it tend to do, is that when, more buyers are coming in or sellers? Let's take a look at that. So I'm going to recalculate. And then we see here, we could compare just in our heads for first half hour. Last half hour looks a little bit less volatile, right? We had like 0.2%, here's 0.1. So less volatility, it looks like, in that last half hour relative to the first. Still like break even, we could see the best move 1%, worst 0.5% in our data observations, and up moves and down moves seem pretty equal as well. So nothing right now that sticks out, but this could help us just to know the volatility of this stock and tendencies and movements in the last half hour of trading. We might want to compare this, to another symbol. So we could just center it in here. And let's just say we wanted to compare, the volatility of SPY to QQQ. So we calculate that. And now we have them side by side, which here looks pretty similar, 0.1%, 0.1%. Of course, these stocks, the difference, there could be a difference in the stock price, so those would be different. But this is similar, the percentage moves. Here may be a little bit difference in the percentage of time the up moves versus the down moves, where the QQQ seems to have more frequency of down moves than up moves, a little bit more than the SPY. All right, and this is looking at a Friday, on the day of the week on a Friday, last half hour. Again, that's if you're looking at two similar stocks that you're trying to do something with. So that's another way to kind of visually analyze this. And these are the charts side by side. Let me take that out of there. And let's go back to all days. Maybe we want to look at an event. Let's say, let me see if we have any FOMC meetings. So these are looking for the days that had FOMC meetings. Okay. So we're down here, we could see here the FOMC meetings. Let me see, at 2 p.m., one at 10 a.m. So these are the days, I guess that they have them different times. Let's see if, so they could be, let me just see if FOMC, yes, so they have them sometimes at 10 a.m., sometimes at, let's do interest, let's do this. Interest rate decision. Okay, so these are the days with the interest rate decisions. We could see from 3:30 to 4 how the stock behaved. Right, so here it looks like we had 1, 2, 3, 4, 5, 6, 7, 8 of those in here. And it looks like the last half hour, the stock tended to drift lower. Okay, from this data set. And the magnitude of down moves exceeded the magnitude of the up moves. Let's try to do that interest rate decision and see what about leading up to it. Let's say that's what the strategy, let's say our strategy is we're just going to create a strategy leading up to not including the interest rate decision, but leading up to it. Okay, what is that? What does it tend to do? So let's say from 1:45 to 2 o'clock. Let's recalculate that. And here we see that there's some volatility there, 0.2%, right? According to dollar move of this stock at this point. It looks like that 15 minutes tends leading up to running up into the decision. There's more periods or frequencies of up moves and down moves. And on average, the up moves exceed the down moves a little bit over here. And on average, out of all of them, it was positive. So this data kind of suggests that, and we could look here, that on average, that 15 minutes leading into the decision was slightly more positive. And that's in contrast with where we looked at the last half hour that looked more negative. So we're right up there towards the end. I'm going to stop there, but I think we discussed, these or covered all these inputs.
Yeah, that's great, D. That was awesome stuff. Thanks for bringing another webinar to the Chameleon community. Everyone who's joined us today, thanks for coming by, checking us out. Remember to give us a thumbs up, like us on YouTube, follow us on YouTube if you're new to the show. Great job, buddy.
Thanks, everyone, for joining. Stay safe out there. Have a great trading day. Have a great weekend, and hope to see you on Monday.